Hello everyone, welcome back to my channel. I'm your host Miss KK and this is Wave. So today I'm back with yet another video and we are talking about the tax amendment that were recently announced by the Minister of Finance as part of the 2022-2023 tax amendments. But before I get into that, if you are new here, thank you very much for stopping by, and if you're already a returning subscriber, an awesome appreciation for always choosing to be part of this amazing community. Before I get into the video, I would like to find out what you are reading in 2023. On my reading list this year is Think and Grow Rich by Napoleon Hill. I got this book from my mentee's library last year and I need to return it, and I'm struggling to finish the book. It's not the kind of literature I would read. I'm struggling to get through the pages, but I promise myself I need to get past it because I can't just be reading the things I enjoy, and I need to expose my mind to a new thinking of, way of thinking in order for me to grow and expand. So I promise myself I am not buying a new book in 2023 until I finish this. And I've been impressed by friends like Sister is on her third book, and then Vanessa is in her second book, and I'm struggling to get to chapter 3. So I promise myself by bringing it up here, I'm gonna hold myself accountable. So let us know in the comment section below what you are reading. Perhaps it will be our next reading list. So that's all I wanted to say up front here. So the reason why I actually want to discuss these amendments is because we are heading at the end of the tax season. Your tax season ends on the 28th of February each year. So you are expected to file your return and hopefully become a tax law abiding citizen. The reason why it's important to get your tax affairs in order is because that most of the time I've seen job opportunities and tender opportunities requiring you to either submit your tax registration certificate and a good standing certificate. So especially if you are part of a partnership or members of a CC, I've seen tender requirements saying that members of the CC or partners must provide good standing certificate, or just an ordinary job opportunity looking for a good standing certificate. So you could be losing out on a tender or a job opportunity because your tax affairs are in order. Plus, if you are close to retirement, or you are perhaps changing jobs and you would like to cash out your pension, your employer is not required to pay your pension out until your tax affairs are in order. So you could be delaying your pension payout because your tax affairs are not in order. Plus, it's just good to be a law-abiding citizen by making sure that your tax affairs are in order. And that is why we are talking about tax matters today. So there have been quite a few tax amendments that have come through over the last couple of days, but I am only going to pick on those that affect you as an individual. I know most of you guys that watch my YouTube channels are young professionals or people that are working, and therefore I'm not going to focus on things that don't have an impact on you. So there are two amendments. One is an Income Tax Act Amendment, one is a Vat Act Amendment. So we are going to be starting off with the Vat Act Amendment. So there were changes to the Vat Act where sanitary pads, which are used by nearly every woman, are now declared as zero rated. When something is declared as zero rated, that means there is VAT charge on that particular item, but it is zero, meaning you don't pay VAT at all. Before we get into how to calculate that, I just want to highlight here that VAT is just a consumption tax. It is a tax you pay on goods and services that you consume in a particular country. Companies that are registered for VAT act as an agent for NAMRA, whereby they collect VAT on behalf of NAMRA, and every second month they get to fill in return and pay over whatever is due to the receiver of revenue or to NAMRA. However, companies, when they spend money and they are charged VAT by other companies, if they are registered, they can get to claim that VAT back. So in a nutshell, they are actually just acting as agent. But for us, sorry, I actually just realized my new place is on a flight path, so there's going to be a bit of times where I'm going to film, and then you can hear a plane flying over. Live near an airport, that's why it is going to, if you pick up that sound, unfortunately, that's what I have to live with nonetheless. Okay. Whereas if you, an individual, pay VAT, because you are not registered for VAT, you won't be able to claim that VAT, so it actually becomes an expense to you. So you actually spend that money and it doesn't come back to you. So what that then means, this means is that if the government says that there's no more VAT to be charged on sanitary pads, it means that you are not going to be paying tax on pads, and therefore you are going to be spending less on a monthly basis on your sanitary pads budget. But there was a curveball thrown in there, and people are actually debating on it online. The ministry decided to take a point of view that tampons menstrual cup, period proof underwears are not considered essential. They are considered luxuries, and therefore this VAT exemption wasn't extended to these items. So if you are in a group of people that use that, you will continue to be paying tax on those, but if you use pads, then you're going to be relieved from paying tax. Do you think this is fair? I've seen some debates about, some people are allergic to pads, some people have heavy flows, therefore they are forced to wear tampons and pads, and it's some people it's a preference. So it is quite an interesting debate to listen to, and I would like to follow it closely to see if the ministry will make a U-turn on their stand and perhaps extend this VAT relief to these other menstrual products nonetheless. So that is what it means for you. This VAT adjustment is effective 1st of January. So from 1st of January, companies are not allowed to charge you VAT. So you need to be looking at your receipt, see if you are paying VAT on your sanitary pads, and if you are paying VAT on your sanitary pads, you can essentially query it at the till and they may refund you your money. Because remember that this VAT adjustment came in late, some companies didn't have an opportunity to adjust their system, because remember, items are onboarded onto a system, or they're loaded onto a system with VAT codes. So sanitary pads, because they were considered, VATable supplies before, they would have been loaded with a code of VAT at 15%, and all of a sudden, because of this amendment, they now need to be zero rated. So some companies' system might have limitation that won't allow them to instantly implement this change. So you might have a lot of override at the till because the teller is trying to take off the VAT that is charged on sanitary pads. So do be cautious when you are buying your toiletries to make sure that your VAT are actually zero rated. So I just want to put this into a practical example. Let's just say that you are a stay-free pads user. Your pack is currently costing you 16. That is the price that is quoted at the shelf. That means that price is inclusive of VAT at 15%, and if you calculate 15 over 115 at $16, it will give you a VAT charge of $2.08 on your pad. But because the ministry has now zero rated pads, it means that you no longer have to pay $16 on the same pack that used to cost $16. You are now paying $13.92. So you'd see it's $2 cheaper. Alternatively, maybe you use the maxi pack. It used to cost you $25. Then the Stay Free brand is relatively cheaper. Let's just say it used to cost you $25. VAT on that would have been $3.26. And because they've removed this, a pack that used to cost you $25 would now cost you $21.74. So you can see it's not really a big difference, but it still makes a huge difference in the lives of some people. And when you are buying in bulk, especially for the girls that run Pets Initiative, this is really gonna make an impact on your pets budget. Okay, so that is really the VAT amendment. Now we're going to move over to the income tax amendment. So the income tax amendment, I want to look at the increased deduction for pension, retirement annuity, educational policy, Keyman insurance policy that has increased from 40,000 to 150,000. So during your tax year, if you contribute to any of this, you are allowed to deduct a certain amount. Previously, that amount was limited to 40,000. This deduction allows you to save tax to the extent of 40,000, of course, at your applicable tax rate. So I want now to illustrate with using an example what this increased deduction would mean for you. The reason why they give you a deduction really is because you are saving the government. So if you are contributing to your own pension or retirement annuity, chances are that you won't be reliant on the 1,000 that the government gives pensioner to make sure that your old age expenses are taken care of. You are able to take care of yourself, therefore the government is relieved. So to try and encourage you to do that, they give you a deduction so you can save yourself tax and eventually save them in future when you reach pension age. Whereas your education policy, if you are taking out study policies for your kids, they need to save you tax now, because if your kids get to university and they have study policies that have values, that means your kids won't need to go and apply for government funding, and government funding can actually be extended to people that have kids that can't afford. So that's why it's an incentive for the government to allow people to save tax, because in future it actually lessens the social budget that the government has towards helping people. So let's get into an example. Let's just assume for argument's sake, you earn 150,000 gross income per year. The only deduction that you have to reduce that gross income is a pension that you contribute of 60,000. So previously, before this amendment, the deduction was limited to 40,000. So for you to calculate what your taxable income would have been, you would have said 150,000 minus 40,000, and it will give you a taxable income of 110. Remember that even if you are contributing 60,000, you could only deduct up to 40,000. So that meant that you would have fallen in the tax bracket where you pay, tax at 25%, and that would have worked out to be around 11,500 tax that you need to pay to the receiver of revenue on a yearly basis. Now let's take what the situation will look like under the new changes. So if you now have a gross income of 150, you are no longer limited to deduct 40,000. You can actually deduct your 60,000 in full because your 60,000 is now below 150. So your taxable income then becomes 150,000 minus the 60, which is your contribution, to give you 90,000. And because you are allowed to deduct more, you actually fall below, and you are now in the tax bracket where you only pay tax at 18% as opposed to paying tax at 25%. So if we calculate what your taxable income would be at what your tax liability would be at 18%, you would have to pay the receiver 7,200 for the year. Meaning this increase in the deduction allowed you to save about $4,300 in terms of tax on a yearly basis. So you can see that this is going to benefit to the extent you are contributing more than 40,000. If you're contributing below 40,000, your tax liability will remain the same. It was really just encouraging people to not try and save in other things because the government was limiting those deductions to 40,000. So just to round up here, what is then your responsibility around this changes in terms of the VAT Act and the Tax Act? You need to check your receipt to make sure that you don't continue to be charged VAT on sanitary pads. Whereas if you are now contributing more than 40,000, you need to assess your tax certificate to see that you're actually utilizing your benefit. Perhaps you need to engage your HR. For a lot of companies, these things are automatically adjusted because most companies are aware of these amendments, but you can't really leave it solely to your HR to make sure that they understand this thing. You might have to pick up the conversation with HR to make sure that your deduction is increased. And if your deduction is not increased for the year, when you file your return, make sure that you're actually putting your actual tax deduction. Don't limit it to 40,000 like you previously did. And if your return goes into audited because you paid too much tax, unlike the Vat Act Amendment, this tax amendment is actually applying since the beginning of March 2022. So most of us that contribute, not most of us because I don't know if my pension actually exceeds 40,000, most people that contribute more than 40,000 would have a refund because they would have paid too much tax earlier in the year when finance was capping their contribution to 40,000. And lastly, don't forget to check out our tax folder so that you can see how this fits into the bigger scheme of things. I have done what payee fives are. I have done the various tax certificate, which actually covers a retirement annuity tax certificate, study policy tax certificates that will help you understand what this means. So go back to those tax folders, refresh your memory, watch those videos, and if you need to, come back to this video so that you can actually benefit from the knowledge. Until next time, it is goodbye, and please don't forget to like, share these videos with your friends and family, subscribe if you haven't done so. Until next time, it is goodbye.